This is the Stock Trading Reality Podcast, episode 146.
You very eloquently showed me that I was wrong about something. And rather than just, getting defensive about it, I really deeply appreciated that.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. Christmas music before Thanksgiving? Nope. Clay Trader.
Yeah, I get it. We just missed the cutoff, but with the logistics of things, it's just where the fun fact had to go. But still, we're in the general time of year. And yeah, I cannot stand Christmas music before Thanksgiving. I very well may be in the minority. Maybe that just makes me the Grinch. I don't know if that makes me something. But for me, let's first get Thanksgiving out of the way, because Thanksgiving is a great holiday. It's probably one of my favorites, if not my favorite holiday. But let's focus on Thanksgiving first. Let's all think about how good we have it, because we all really do. All the things we have to be grateful for. And then we can focus on Christmas and Christmas music and all that sort of good stuff. And that's just my wife. She gets on board. She knows, let's not play. Really, my wife and we wait till December. That's just our personal opinion. But the beautiful thing here is I think I'm feeling some beads of sweat right now, because I don't know what Chez's policy on this is. So I hope we're not going to have like a throwdown here, a verbal smackdown, because I don't know what his for all I know, maybe he's been playing Christmas music since spring. I don't know.
24/7 yeah. Christmas music from Christmas to Christmas. It's the only station that plays in my household.
So Chez, but unless you're being serious, but what is you and Kelly Traders, do you guys have a position on this, or have you never thought about it? I mean,
yes, we absolutely do have a position on it, and I'm the Grinch in terms of, now that I see they're selling all this Christmas stuff before Thanksgiving, it kind of grinds my gears more than anything else, because I was like, wow, you just are skipping over one completely. And correct me if I'm wrong, do people anticipate Christmas more because there's gifts associated with it? Because I don't know, I look forward to good food, and that's when Thanksgiving comes. I get good food at Christmas too, but I don't know, maybe I'm thinking maybe people are greedy and just want Santa Claus to come early, and the sooner they listen to it, the sooner he'll come. But that's not true. So we're in the same boat in terms of no Christmas music. I think Kelly actually put up the Christmas decorations a couple days before Thanksgiving, but that's because she was going to be out of town and wasn't going to be here to do it. So when she's putting up Christmas stuff and whatever, she will play Christmas music. But that is the only exception, and it is a very, very rare occurrence. We always do Thanksgiving first, and then we get the Christmas stuff up early so she can enjoy it for a whole month before I turn into the Grinch and tell her we got to pack it all up.
Yeah, before you get out the duct tape and duct tape those boxes shut. But yeah, I mean, nothing against. I just, let's let Thanksgiving pass.
What's the rush?
Yeah, what's the rush? You still got plenty of time after Thanksgiving, but that's that. We won't rant and rave on that anymore. Today we have tonight, this morning, middle of the night, whenever you decide to listen to this. But we have a great guest. We have a great episode. Today we were talking with Stan. He goes by PapaBear in the name, or in the chat room. And we learned in version 1.0 of this interview that the name comes from, part of it, Bear comes from his name, and then he's a dad. So PapaBear, he explained that, and I say version 1 because, as you'll learn, we had a whole bunch of hiccups with this thing, and we finally got things going. But PapaBear is his name. If you've been around the community, I'm sure you've come across them. But he presses Chez and I's buttons a couple times to kind of send us ranting and raving. He drags us down some really good rabbit holes. So there's all sorts of things, thanks to his candidness and thanks to his openness, that I'm convinced that whether you're brand new or experienced, there's something that you can take away from here, because it's always cheaper to learn from other people's mistakes, and always cheaper to learn from other people's kind of experiences that they've gone through that can create headaches. So it's always a little bit less painful if you heed other people's warnings and stand throughout a lot of good warnings. And as he'll reveal, I don't want to spoil it, but he's doing very, very well for himself now after figuring out what he needs to do, what he needs to focus on. And yeah, I want to start talking about it more because it got me pretty fired up, but I don't want to spoil the interview. So without further ado, let's hear from Stan, aka PapaBear. Stan, welcome to the show.
Hi, it's an honor to be here.
Kind of again, because this is take 2, and as I thanked you at the beginning of the last Take one, we were already having issues, and then we had more issues. So here we are again. And
this is take two, platform two. So
we are down the rabbit hole of experimentation right now, but really no excuses at this point because this is the platform we've used before. But hey, that this just, I guess, comes with the territory. So we're going to try to make this as natural as possible, but for full disclosure, some of this may or may not be staged for the next few minutes. Luckily, it happened quick, but yeah, some of this we have already talked about, and it won't quite be as natural since that's what we're always trying to. Our goal here is just to make it as real as possible. But yeah, take two, platform two, like Jess said, and we had a little chat about avatars, but upon reflection, that really has nothing to do with what the majority of listeners here are talking about. But, you know, those members in the community, they know that, you know, I like avatars to stay the change. Stan changed his around, but now he's back because it stands out better. And I'm very happy with that decision. We also discovered that, Stan, you said you've been around for 18 months now. Am I remembering right?
Yep, June of last year.
Perfect. And he goes by PapaBear in the chat room. So if you spend really any amount of time, then I'm sure you've come across them at least from one point or another. And yeah, he's somebody that's been around. He speaks up. He gives alerts. So he's definitely a good asset to the community for sure. And I don't know how you slept or slept. What word am I looking for? How have you slept? Crept through the cracks? What am I saying, Chaz? What is the saying?
Slip
through the cracks.
Slipped is the word, my friend. Slipped.
Yeah, slept. What?
It's turning into Jeopardy.
What kind of life choices have I made to not even be able to say a saying like that? But somehow you slipped through the cracks, Stan. How did this happen? You've been around for 18 months and we're just now having you. Have you been avoiding Chez and I?
No, you know, for the first couple of months, I was pretty active on the boards. I'm not giving alerts or such. I was still kind of getting used to the lingo and still getting through the courses. But then I went away for a few months to kind of find myself on the mountain. But I guess I've been back more in full force the last month or two. So that's where you're really seeing me put more alerts on and being more active on the board. And, you know, there's just a lot of lifestyle changes going on my end, which we can get into a little further as we need be. But that's allotted me a lot more time to focus in on, you know, where I'm going as for my trading. And just over the last 18 months since starting, it's been a pretty wild ride and it's all evolving.
Well, and that's the whole point of this. So I'm glad that, well, yeah, we'll get to those areas later on, but I guess that does make a little bit more sense on how you slipped through the cracks. Let's just go back to the very beginning of all this, and we already kind of went down this rabbit hole, so I know that you're going to tell us about the Brady Bunch. But where did all this start for you? Where did you hear about the markets, and then kind of what happened and that took you to the point of wanting to get more and more hands-on and active within the market?
Sure. We only really got 30 seconds into the story, so backing up a bit. Back, I guess in the 70s, there was a show called The Brady Bunch, if you remember. Obviously, well, Clay doesn't remember. Were you even around back then?
Yeah, I was making fun of Clay because it's very un-American of him not to.
No,
he says he's aware of it though. He said, "Go ahead and defend yourself. I'll let you defend yourself."
The way Stan presented the question was, I took it as, and maybe I overthought it, so I'll give full admission there. But I thought he asked, "Do you remember the Brady Bunch?" as in like when it was originally airing back in the 60s? And I said, no, I was not around back in the 60s, so I do not remember when it was airing, when it first came out, but I am aware of it as a show in general. And Stan, that's how you actually meant it, right? You were asking, were you around back? Okay, yeah, so I mean, there we go.
Imagine me, I was sitting there, you know, we had a little black and white television, probably 13-inch screen at the time. In this episode, the father was trying to teach us a lesson to the sons regarding stock trading, and one of the sons picked this company called Retro Rocket because it had a cool name, and then the other son, on the advice of his father, picked a more conservative company. But you know, obviously, towards the end of the show, obviously it's a family show. They're trying to teach a lesson. Retro Rocket had taken off, and it was doing great. And by the end of the show, it come crashing back down. While the younger son's more conservative company, you know, prodded along and was showing some decent gains. So back at the time, we had the print newspapers, and I thought, okay, so that's, that was my first lesson in looking at the stock market. So I pulled out probably the LA Times at the time that we were receiving, and looked back in the stock prices back then, and kind of, everything's like in eighths and sixteenths or something, where it's rather than using decimal points. But I guess that would be my first, looking at the stock market. As a kid, I just kind of pretended to play the stocks a little bit. I picked a few tickers, and I, in my own fashion, kind of paper traded them. But mind you, I was probably like 10 or 11 at the time, so none of this really mattered.
So, Clay, correct me if I'm wrong, but we've had a couple other members who have kind of been introduced at a younger age. But I guess what I'm really curious at is, when did you start kind of getting involved in the market yourself? A lot of people I have 401ks sitting on the side. Some people, right when they're in high school, start, their dad or something might give them some money and they can trade it for them just to show them how stuff works. When did you kind of take it to the next level in terms of taking an interest from the market as a child into actually putting some money on the line or kind of paying more attention?
All right. Well, we'll have to fast forward to around the turn of the millennium. Year 2000-ish, on the dot-com boom was going on. Obviously, everybody and their janitor was getting in on it. And actually, I've some notes from way back then. If you can believe, AMD was once trading at around $90-something a share, and I was playing that one quite frequently. But I did what many people do at that time. I was on Yahoo Finance, getting most of my information. Opened up a brokerage account, I think initially with E-Trade, and then with another outfit to try to get some better pricing. But that company is no longer around. And then I was getting some data feeds from eSignal. I went as far as buying a laptop and getting like a wireless modem connection, so I wouldn't be using my work server to have the data feeds. And I just let that run all day. And wow, come to think of it, I mean, just like everybody else at the time, things rocketed up, and then you kind of you hold and hope as it was coming back down, and at some point you say uncle, and then I just kind of stopped at that point. My notes kind of ended with my second daughter being born, and I think I just pulled my attention towards something else at that point.
Okay. So you said you got eSignal back around, the turn of the century?
Yeah, I might have been one of the first ones to subscribe to that.
Okay, yeah, I was going to say, I was not aware that eSignal had been around that long, because that's, for listeners' context, I've been using them for my charts and stuff since basically I started, but I did not start back when Stan is talking about in terms of the .com boom and all that. So, I mean, where were you getting your ideas at this point in time? Was it literally the headlines and then, like you said, going to Yahoo Finance, or were you like talking with people at work, or was it just, hey, what's the headline, on the internet right now, even as primitive as the internet kind of still was back then?
Yeah, really all of the above. I mean, Yahoo Finance was probably a big one because that's where all the news kind of filtered to. We didn't have a lot of these other news services really up to speed at that point. A lot of the print newspapers were still scrambling to get online and experimenting with paywalls and such. I had this one particular coworker who was always feeding me probably the worst lines. He was trying to get me into the penny stocks at that time. He's actually the one who got me into AMD, which I think I probably lost most of my money on the ride down from AMD. I mean, it was at 90 and it split. Then it went into the 40s after the split, but then now it's probably trading, it's trading in the teens. So it's not a really happy story with AMD. Funny thing, I've been trading AMD lately, and I've probably made back the majority of those losses from way back then, but, converted over time and, interest probably still quite in the hole from that one particular stock. So as I say, don't fall in love with any particular ticker. That's for sure.
No, that's exactly right. And it sounds like you did make some money during the .com boom. I mean, you caught some of the upside, right? Or were you kind of coming at the tail end right before the bubble went pop?
Oh, I was just throwing darts. I thought I knew how to read charts because I knew how to make charts. Because I have a background in finance and accounting, but just because you can, program a chart doesn't mean that you can actually read what's going on in there. No, I probably at that point I probably only lost about 5,000 considering. I mean, when I closed out my last trading account with that high frequency broker, I still had a few $1,000s left, so it wasn't a complete bust. But I kept feeding money into it, so I would say I did blow up that account maybe a few times, but it was a low dollar amount. Comparatively speaking, I mean, looking back at it now, that $2,000 was probably worth a lot more to me then than it does now. Not to downplay it, but
no, but you had kind of done some form of risk management by not throwing your entire life savings into it and just kind of winging it. So kudos for that. But I guess, so what kind of, did you read books about trading, or where did you kind of figure out how you wanted to pick stocks and how you wanted to get in it? Did you do the traditional Warren Buffett value investing, or were you just kind of finding a bunch of stuff on technical analysis? Because I have no idea what the landscape looked like back then during all this stuff. Because like you said, it's a great quote, is that everybody and their janitor was kind of making money trading the market at that time. So what kind of route were you looking to kind of pick a criteria, or were you just looking for whatever was hot?
I didn't even know the difference between trading and investing at the time. I mean, you get advice from the investors, but then you start acting like a semi-trader. That's just a world of hurt coming down your way. Because I mean, a lot of what I've had to do now is deprogram a lot of the habits and things that I was taught or self-taught early on, which I thought would help me out as a trader, but it's a completely different mindset. You don't want to mix up this different schools. And problem is I never know what hat I'm wearing. I mean, as I said, it was just throwing darts at a board, kind of falling in love with
it was randomness, right?
Pretty much, just pure, looking back, it was just insanity. Thinking, I'll buy here on the dip, hope it goes up. Buying on margin, because the margin requirements were non-existent at that time. You just basically put money in, they'll here, take a loan.
Right. It's just like real estate, no money down stuff. And I've learned over now the 140 some episodes we've done that when people are trying to describe their early parts and they're stumbling over their words and maybe it doesn't quite make sense the way they're describing things, that's kind of the cue that is just basically the epitome of how they were approaching the markets. Is it kind of sounds like it doesn't make sense while they were explaining it, because it really doesn't make sense. There was no sort of system. So like you defaulted to, Stan, I was just pretty much throwing darts because that's really all you can say. So I get it. And Stan is a very intelligent person. So him stumbling over his words and maybe we're thinking, dude, put together a coherent thought. There was no coherency during those early days, and you see that in the reflection of, and he's not alone. Like I said, this is the one thing I've learned is usually the people, and I always kind of sit back and chuckle in an evil type of way, because I'm just like, I can relate to that, where things are just rough, and sometimes all you can say is, you throw a dart. So do you have anything else you want to add to that, or you were dart throwing with and making it up as you go? Is that a fair summary, or do you need to throw anything else in there?
No. I mean, I really can't, put anything more to the shame to that, to that experience.
Well, I do thank you for your just bluntness and candidness in terms of just kind of shooting straight, because you're certainly not alone. But then you made the comment that your notes ended, you had your second daughter, and then you were away from the markets. So I guess what ultimately brought you back to the markets, and then for a timeline perspective, give or take, when exactly was that? A, when did you come back to the markets, and then B, what sort of events brought you back to the markets?
Here you go. This is where it gets fun. So I started up a business, and I really wasn't paying attention to the things that were happening in my 401k. I'd always been one to max out my contributions. From ever since I started working. So had a little bit of money in there. And then the stock matchings from when I worked at the Mouse House. But then, so I'm on the job, and one interesting thing about my job is, since I'm kind of like a contractor, I'm out all day and I just had my headphones on. I'm a news junkie, so I listen to the news just all day long. And one day, there's a story on there. It's very rare that they go in depth on a mutual fund. Say, there's this particular pharmaceutical company tanking right now, and it's bringing all these mutual funds down. And they mentioned my particular mutual fund. I'm like, oh, I better go check, which I haven't checked it for years. And yes, I'm looking at a chart that's just tumbling down. And so it's a 5-star Morningstar fund. It was like, Warren Buffett's best friend that originated it. It's closed to new investors. I mean, it's just everything across the board will tell you that this is a good fund to stay in and stick with. But they broke their rules. They got way heavily invested in this particular ticker, and it was coming down. So I said, okay, getting close to 50 at the time, I said, this isn't going to do. I just, my retirement's going to be gone if I let these people keep managing it for me. So I pulled everything out and emptied out that 401k into, rollover Roth, and started trading it. Since then, that was probably maybe 2 or 3 months before joining CTU. And there again, it was kind of going, I was just there again, putting on an investor's hat, trading short term. It's not a good blend. And I would say I just kind of stayed flat, not really going anywhere. And just thinking to myself, okay, I need to do something to make a better go at this.
Well, flat is certainly better than down, especially when now you got your entire kind of the whole wad that's waiting for you at retirement age. So good for you for kind of pulling out of that fund, though. But I'm sure that that must have been an interesting kind of feeling that all these guys who are supposedly professionals and this entire fund of people backed tons of great money, tons of big money, and they screwed up. They broke the rules, and you were able to kind of say, okay, you guys aren't looking out for my best interest, so it's time for me to start looking out for it. What were you going to say, Clay?
I had a quick. Was it? Ches, what pharmaceutical company do you think it was? I have my guess. I'll let you go first, though.
I don't know. I look at pharmas every single day, so the tickers just blend together.
Oh.
I have no idea.
My guess
there's a bunch that are in the news. I don't know.
My guess would be VRX. Was that the one?
Bingo. That was it.
Wow, good job.
Well, don't you, Ches? How can you not know VRX? And that thing was.
I mean, I do, but
do you remember how bad it got though? Like the thing was over $100 and
I think it was in the 200s.
Was it in the 200s? Yeah, and now it's in like.
Would it go down to like 10 or something?
Yeah, it got
pretty close to single digits there. Yeah.
So, anyways, Ches, I just had to. Now,
I'm just glad I didn't write it all the way down.
Yeah, no, to Chez's point, you did a good job in recognizing that really the professionals were the ones that screwed up, and it sounds like the risk management got off kilter, which was causing things to get lopsided. But yeah, good. Sorry, Chez, the ball is back in your court. I just wanted to see if that was the one that I was thinking of, because I know that one was definitely nasty.
Yeah. So I gotta say, good job on you, because you see 1,000 tickers every day. But awesome, yes, that one was kind of a big doozy. But so you pulled the money out. The good thing is, like I said, flat is better than down, and you are trying to do short-term investing, which is kind of an interesting. It's interesting. That's all I'm going to say. But that's okay. You realize that you needed to kind of change something, yes. Right? Because you're not going to settle for happy and leaving it flat. There's no reason. You personally believe you shouldn't be out of the market, so you just want to find a better way to be in the market, right?
Exactly. I needed to open my eyes to things, and what I was doing just wasn't working. Like a lot of guys, I hit YouTube for the videos. I'd read what I can on the internet, trying to piece things together. Started looking at options, but not really playing them as of yet. But then I started getting scared. It wasn't what I was learning that was scaring me. It was like, okay, what is it that I don't know that really scares me? And having tried to piece some kind of technique down from multiple sources, and all these different traders have different trading styles, and trying to come up with your own style amongst all this shambles of information was starting to get to me. I knew I didn't have a complete trading plan. I know I needed someplace more concrete to start. There again, I can't overemphasize the fear of what is it that I don't know. That's really going to, hang me up as I go.
That's good though. Most people don't kind of take that approach to looking at trading. Is most of the time they think, oh, I know this, and this, so I have an edge, and here I go. And you, on the other hand, are fearful of what you don't know. So,
Ches, sorry to cut you off.
Go ahead.
No,
Take the
you're going to
rebel.
appreciate this. Because real time, as we record this, Ches, you were just trying to talk to some new person that showed up in the chat room. And this person is basically the exact opposite of what you just described. Would you agree?
Yep. Absolutely.
Yeah, so why don't you share with listeners? Like I said,
opposite.
this is why I got excited and very rudely cut him off, was because we're not making this up. Literally happening. We're not right this second, but as of 10 minutes ago, Ches was having a conversation. I'll let you nutshell it, but what exactly is this person's mindset currently?
This person's mindset is they believe that they are cursed because they're making emotional trading decisions, and everything they do is the opposite of what they should be doing, but they believe that they know enough because they've gone through education and done all this other stuff, but they
random education, right? Random free education?
Yep.
Okay.
Yep, random free education, but it doesn't appear, based on the lack of responses lately, that they have any type of fear about what they don't know. They think that they know this because they piece these things together, and here, a perfect case study is that they consistently lose. So,
including being down $1,000 today.
Just today.
Yeah, just today, and and
down 5 figures as a whole. Yep.
Yeah, 5. So, anyways, that was basically you can't make this stuff up. What Ches had described, or not Ches, what Stan had described as the problem with the free education, and as we always say, and I will continue to say, every single bit of information that you need to become a good trader is available for free on the internet. The flip side, there's all sorts of stuff out there that is not going to lead you down the path of success. And when you don't know what you don't know, and then you combine in the fact that the internet is a vast, vast ocean of information, it is no wonder why, well, props to you. Like, I want to piggyback off Ches. Props to Stan for realizing that relatively quickly, because quote unquote piecing things together, that's just not good enough. You need to have things totally intact, as opposed to this other person that Ches just dealt with. That's not shocking, but their attitude towards, well, my solution to the problem is I'm just going to keep on trading and learning from my mistakes. Well, I don't know. Maybe this person has a money tree in their backyard where they can just keep going picking Benjamin Franklin's off of it, but eventually that's going to run out. So sorry, Stan, I blame you for this just tangent we went on, but way you described it all, that was a really good description. Wouldn't you agree, Ches, about just how the experience of free information can be nice, but at the same time it should scare you when you don't know what you don't know?
Yeah, really, really good experience and great timing on that. But that's exactly. I wish more people had that fear of what they don't know versus people who think I know everything and it's time to kind of go in. Mm-hmm. So I'm happy you have that fear. The free education is kind of you understand that there's pitfalls there. How are you going to overcome that? Are you going to go find somebody that has done it for a long time? Are you going to just give your money back to an advisor? What does your trading approach look like from this point, now that you understand that there's something else that needs to be done, because flat isn't going to get you to a good retirement?
Yeah, and same boat as a lot of traders are in. It's quite a lonely street out here. It's hard to really come up and have an intelligent conversation about stock trading among friends and family. A lot of them roll their eyes. Oh, you're a gambler. Shouldn't be doing that.
Oh,
just
can't stand that.
Buy and hold. Warren Buffett does that. Fundamentals. And just finding a mentor out there is it's critical, but it's nearly impossible because most people aren't trading. Most people aren't trading intelligently. And if you're going to do the water cooler conversation, don't expect to find any real constructive help. A lot of people, I was looking at the various gurus that you find online, just trying to find some of that I'm going to mesh with. And I just say Clay's mannerism was probably the easiest to line up with, and not to make it like a sales point, but I mean it didn't sound like he was slicking back the hair, showing off his Lambo copter or anything like that.
That's only at the meetups. Only at the meetups.
That's in 2018, our new marketing efforts.
If I can, I'm going to go ahead and build a Lambo copter and bring it to one of these things one of these days. So,
Please do. I mean, Ches, he's a pro and all that sort of stuff.
I'm the head engineer for that project.
Exactly.
Yeah. But just like a lot of people, I'm real hesitant about forking money over for training. I mean, I'm from the Napster's generation. Everything is free. I've downloaded music. I do BitTorrent. I can get pretty much any movie I want to from various sites offshore.
Which we're not condoning here, just as an FYI. That is Stan's. Yeah, that is Stan's choice, and that's fine. No judgments on our part, but that is not a sponsored viewpoint.
Yeah, I haven't done that in weeks. Okay, so I'm over that. So.
The next person going to be stopping over at his house, Ches, is going to be the FBI. So I mean, with everything else that's popped up here, that's probably.
I can hear the helicopters already.
Yeah, I hear the drones flying over.
But did you know what I mean? I mean, it's.
No, I got you. You came up with free. Yeah.
Yeah, and I mean, but gosh, how would I just? I sent. I just sent. Clay, I really appreciate the way you always respond to every little reply. And I think you threw back at me the doctor's dilemma or something like I think it was called.
Oh, the surgeon's dilemma.
The surgeon's dilemma, yeah. And it's kind of just rung with me. It's like, wow, that guy really had a proper response to my when I make enough money, I'll think about putting it in the trading classes. It's like, really? So everyone should just go to work before going to college, and once you save up the money, then you can put it into your education. I mean, it's not something I'm forcing down my daughter's throat. Oh yeah, go make some money first and then go to college. Learn your trade. Better to get the training first, and then go through the apprenticeship time, and which we would call paper trading. Before expecting to see the gains.
Exactly, and the whole logic flaw that I should probably touch on, within that video. But, let me first make money, and then, because this is what the surgeon's dilemma is, you would never, nobody would ever let you experiment on them so that you can pay them, and then they can go to medical school to learn how to become a brain surgeon. That's just not going to happen. So in trading, a lot of people do, let me trade first. After I make some money, then I'll spend that on the education. But think about the logic there. As soon as you make money, what are you going to think? That you need education, or that, hey, I got this figured out? You're going to think, I know what I'm doing. I got this figured out. Why would I ever spend this money on education? Because I just made money without the education. And then you know what? You could make another trade and another one and another one and another one where you're making money. So therefore the thought process goes, why would I ever spend any of this money on education? I am making money. And then all of a sudden, as you've heard time and time again for you longtime listeners, that one trade comes along, and booyah, you figure out you don't know what you're doing, and all that money is gone. And then all of a sudden you're just thinking, okay, the next time I make some money, I'm going to put that in education. And actually, this brings up, thank you for bringing up the surgeon's dilemma. Literally the first piece of content I ever put on claytrader.com, which was about 4 years ago. We're approaching our 4-year anniversary. But the very first piece of content was what I call the vicious cycle of failure. And that's what I just described. People say they want to get education, they want to make money, but as soon as they make money, why would I spend money on education? I know what I'm doing. And then they lose it all, and then it goes right back to the start. Well, okay, let me just make some money, and now this time I'm going to spend it on education. And then it's just the vicious cycle goes on and on and on. And usually, either the person blows up their account or they just get burned out and they default to the conclusion of, it's all rigged. It's those market makers. It's this, that, or the other. So that was you were suffering from the surgeon's dilemma going in then, huh, Stan? I want to say I remember those emails, but I very well could just be making that up because I do get quite a few emails and comments. So
that'd be some pretty fantastic memory considering it's over 20 months ago. So
I was going to say, but maybe it's probably just a matter of I get a lot, and Chez can attest to this too. We come across lots of people that are within that surgeon's dilemma. Chez, you see it quite a bit too, don't you?
Yeah, not only do I see it a bit from the outside, helping customers and stuff like that, but that's the reason why I'm here today, is that video that you linked me, Clay, when I reached out many, many years ago. You had already made that video, and I was like, wow, it blows my mind how until somebody says it to you, it makes perfect sense talking it through, right? Anybody listening is probably like, yeah, that's totally, just like you said, if you want to be a doctor, you don't walk into the operating room and cut some guy's brain open and start doing surgery to pay for medical school. So once you put it like that to me, I was like, okay, wow, my logic is really flawed here. And that's when I took the hard turn and actually started getting educated. But yes, it's funny how, but though, unless somebody says it to you, and I don't know why it is, we just have these blinders on, it doesn't seem very apparent. It's just like you said, oh, I made some money without any education. I know what I'm doing, obviously, but then it's usually when crap hits the fan that you realize you don't really know as much as you think you know.
Yeah, and that's the cruel joke, because from a logic perspective, that does actually make good logic. I just made money doing something, therefore I know how to do it. Therefore, why would I pay for something that apparently I already know how to do? Like that's good logic there, but that's why the markets are so difficult, because good logic is in many cases bad logic. But Stan, I blame you once again for you're sending us off on these tangents. Ches and I are ranting and raving. But Ches, talk about memories. That would make sense, though. I mean, because you've been around for years. But that video I made, The Surgeon's Dilemma, was back in the chalkboard days, the white polo shirt days. So that was like probably one of the first 5 videos I ever made. But anyways, we'll walk down memory lane. But you're right.
People should think about that. And here's how that won me over. I'm a pretty stubborn guy sometimes, especially it comes down to being conservative with money. And, you very eloquently showed me that I was wrong about something. And rather than just, getting defensive about it, I really deeply appreciated that. You made a good point, and I couldn't fault that. So that's really the reason why I decided to take the plunge. And at that time, yeah, $2,000 was, a pretty significant, portion of what I would consider my trading funds, because I wasn't even above day trader, the pattern day trader rule at that time. But yeah, that's why I decided to just go full bore and go CTU all the way rather than piecemeal it, or just getting just the chat room membership. And if I may throw something out there regarding the new people to the chat room, it's pretty intimidating coming on board initially, because there's a lot of jargon. You almost can't follow along with the conversation unless you've taken some of the classes, because we speak in a lot of shorthand. But we're not going to flame you there. There's a lot of tough love, though. When I came on, I think Ches immediately had to delete one of my first postings because I think I probably referenced some course material. And, that's how quickly you forget about the rules after you read the rules going in. But yeah, I mean, I would say tough love. That's what those chat rooms are, because we really, I mean, we cheer each other on when we get those gains, even if it's $50 at a time. But someone comes on board, and especially a lot of the newbies, the first thing out of their mouth is, "Hey, what do you think about this stock?" But the reply that they're going to get is, "So what does the chart say?" We're not going to pump a stock. I mean, good luck if you're going to try to get someone to pump a stock, or be successful in pumping a stock there. They're the first ones that are going to get pushed back. Hey, learn how to fish, buddy. We're not going to just start throwing a bait out there. Yes, there's the alerts, but each alert has to be traded specifically towards your trading style. I mean, there's alerts from folks that I can't even touch because it's not where where I'm comfortable. And if I put out an alert,
and I mean that you. Go ahead,
if I put out alert, this understanding that there's a certain context to it. I mean, I try to put the time frame and the pattern that I'm looking at, but you could have the same ticker doing the same thing and have 10 people in a room trading it together. You're going to get 10 different results. And
I mean, you bring up a great point, because I say it almost every single podcast that trading is a very, very personal thing, a very, very individual thing. And just for example, for those of you who don't believe me and Hooch, multiple years ago at this point, both trading Google, we saw the alert. But remember, alerts, it's more so, the purpose of alerts is to get your eyes on. We're kind of an eyeball army. We're kind of, you get hundreds of people scanning for opportunities. Doesn't mean you have to trade every single alert. In fact, I rarely trade anything, maybe 1 or 2 of the alerts per day out of, sometimes 50 to 100 alerts. But what I want to kind of mention here is that I traded it from the short side. Hooch traded Google from the long side. And we both made money. So that's kind of, if that is not the most glaring thing, that trade plans are going to be very, very subjective to what your view of the market is, what your view of the trading plan is. And I had no problem stopping out, and Hooch had no problem stopping out. We weren't just holding it until we were right. But we both made money off of the same exact alert. And I mean, Stan, you really kind of nailed it in the sense of some of the stuff that comes out there, you might just look at the chart and be like, that's not a trade for me. And other times you'll pull up something that was alerted and you're like, wow, I love this setup. This is one of my favorite setups. So, but I do got to touch on the tough love thing. I understand, especially if you are a newer trader and you've been in other chat rooms, a majority of the times things are just, wow, I'm buying here. Oh, wow, it's going to the moon. Or, wow, sell this thing, it's crap. We don't really do that here. We don't give any recommendations. All we do is look at a chart, and it's up to you if you want to, form a trade plan and stuff like that. So we don't mean to be cruel. It's all about tough love, and we have absolutely no problem telling people who are just blatantly gambling that you're a gambler currently. Oh, yeah. You don't have to stay that way.
DT told me that early on. I got that from DT. He said, you were a gambler, son. And that just took me back because I don't like gambling. I sit on my hands in Las Vegas. I mean, forget it. I don't even play the slots. So to be, have someone say, you're gambling, it made me have to sit back and think about that for a second. Say, really, what am I doing here when I, just, jump out of the plane and pull the ripcord, which I've done on a lot of trades.
Yeah. But you said the key word and you said it in passing. And I'll paraphrase, but sometimes I look in the chat room and there's an alert and it just doesn't make me comfortable. That is just, in passing, okay, it doesn't make him comfortable. But stop and think about that. Stan actually knows what does make him comfortable, what doesn't make him comfortable. But how is that possible? Well, because Stan has a system. Stan has a strategy. Stan actually knows how to put together trade plans and look at the market. So I get it. Comfort, comfortable, just one simple word. Both in the context of trading, to actually be able to know if you're comfortable or if you're not, then there's a lot that goes into that, and that's why the alerts exist out there. They're, hey, check this out, and if it's in your comfort level, perfect. If it's not, then I'm sure there's going to be another alert coming. But, well, how do I know if it's in my comfort level? Well, there you go. That's probably a good clue to you as a listener that you need some education. And I'm sorry, but this is not comfort level. Oh, well, I only trade stocks that are below $10, so that one's at 15, so it's not in my comfort level. Okay, that's like surface deep, but there's a lot more that goes into comfort and knowing what is your comfort level and what isn't it than what a lot of people than what they understand. And I get it. It may not seem like that much because it's one word, but there is multiple layers to it, and that's why the power of charts and why it's so important to get educated. And you can play around all you want. You can try to talk the talk, but to anybody that's experienced and educated, they're gonna be like, yeah, you're just gambling. I get it. You're trying to spin it around like you have some sort of trade plan, but you don't. That's just pure gambling. So I guess my question is, you get CTU, and then are you still trading actively, or do you just straight up go to paper trading in the courses? What was your kind of plan of attack after you finally made that plunge into making the investment into that program?
Okay, well, a lot of times when I get started on something, I'm just like this eager beaver, and I can't control myself. It's like a kid with a brand new glove. First thing I do is, binge through all the courses. Probably got through most of it in a weekend. And then, honestly, I tried.
Weekend?
Yeah.
Wow. Binge mode for sure.
He might have me beat.
Yeah, I was
doing 8 to 10 hours a day. Yeah, you might have me beat, Stan.
It's chess mode, but
I think some of them
I don't like the word binge. I probably
didn't get through the advanced courses at that time, but all the basics, robotic trading, went into level 2s, risk and reward, trampoline I loved, but yeah, a good section of them. I mean, things like that. I mean, the penny stock chapter I didn't look at. I probably won't. So I think it'll convince me more not to go down that route, even more so. But quite honestly, I mean, since I'd already been trading, and I tried the paper trading for a while, and here's the the thing about my psyche is I kind of don't learn unless unless there's something on the line, I guess. I mean, the paper trading was good in kind of, figuring out the buttons and, knowing the mechanics, but that kind of that's where you start getting into trouble. You know how to place the trade, but you don't know how to, follow through with it. But I think there's a subsection of us out there that has, unless they have the adrenaline rush of having a live trade going out there, the lessons don't stick, or it doesn't hold your attention. So, I just have to be honest with you guys. I pretty much kept every trade live after my first attempt at paper trading, and it's been. Obviously, the results have been good and bad. I wouldn't advise other people to follow this route. But I think it. I just had to be honest with myself. I'll never get through the paper trading unless, or actually put down some trades, to learn from, unless I'm going in with real money. But I know that sounds really dumb when I say that.
No, let me. It might. I'm gonna give the dumb test right here. If something went wrong with one of these quote unquote paper/real money trades, was your entire account on the line, or was it going to be a very minimal loss?
Oh, here's where I redeem myself. Ever since from the beginning, after I shed the investor mindset, because I used to be about 75% invested, but a majority was that in equities. But ever since I started going down the route of using, trading in options, I really brought that down to where I would say sometimes my cash position's 90%. I'm probably never more than 30 to 40%. That's including the equities that I hold. So I'm primarily 60 to 70% cash at any given time. I would say at the beginning of the month I was right at 90% cash. That including the equities. So I had really peeled back, trimming off my profits because I was doing really well at the beginning of the month. But yeah, it's all about position sizing. Options have the extra dimension of time. You don't want to, shortchange yourself on that. So that's kind of like how managing the risk is position sizing and giving the trades enough time. Once I get down into weekly options, it's very easy to just, be at 100% loser with no chance of recovery. But if you keep your position sizes way down, maybe 1/4% of your portfolio, you could lose like that for, hundreds of trades and right. It'd still not be out. For example,
so let me bring up a point here. Real quick, because you nailed it. You said position sizing multiple times, and that's really, this is where things can get too broad with. So don't do this as a listener. Hey, I was listening to that Clay Trader and Chez's dude's podcast, and that guy said that he never paper traded. He just used real money with education. So that's what I'm going to do. Okay, yeah, that's what he did say, but he also understood the context of position sizing, where if something was going to go wrong, it wasn't going to have him and his family begging for soup underneath, some bridge. It was. So there's definitely differences from a broad sense. Yeah, Chaz and I always say, make sure to paper trade. But there's definitely nooks and crannies where when you understand certain things, aka position sizing, it does make more sense to do what Stan is doing in terms of, having some skin in the game. Some skin in the game, though. Way too many times people don't understand position sizing as it pertains to risk, and then they're going and saying, well, yeah, I just need to do this because that's the best way I can learn. Fine, but you have to do it intelligently. Would you agree there, Ches, that from a broad sense, that's why you and I would just say, yeah, make sure to paper trade first. But there's always more to the story. There's always more layers of context that can make doing what Ches is describing make sense.
Yeah, there's always kind of caveats, and I was just kind of very similar to you, Stan, in that I could paper trade really well, but the lessons and the continuous things that I would do wrong wouldn't stick until I started trading small. So, and you nailed it, Clay. Having some skin in the game is different than most people. When they say they have quote unquote some skin in the game, most of the time they're all in. and it's make or break. That is no way, that's a surefire way to kind of blow up. And like I was hoping Stan would bring some tears to your eye when he's like, yeah, I have maybe 0.25% of risk on the table. And I was like, you're preaching to the choir here. That's what all new traders should be doing, is keeping their risk absolutely as small as possible, because I don't know how many times I can say it. Until you're a multi-million dollar trader, once you find something that works for you, you can scale it. You can go from 0.25% to 1%, and then even if you're getting better entries, you could always just continuously risk 1% and make 10 times as much as you were before. The thing is, though, you got to figure out what works for you, what's comfortable, what makes sense, and what has kind of a good expectancy. So when you said 0.25%, I was like tearing up over here. I love hearing that.
And the other thing, which I'm going to end it right here, because trust me, I've talked with many people. Also, this is not the excuse. Okay, so I don't have to paper trade, and as long as I do position sizing, then I'm good to go with trading. Well, you also have to know what you need to practice. And keep in mind, and within the context, this is after Stan has invested into his education. Of course, we would love to have you at Clay Trader University, but if you want to choose somebody else, that's fine. But going out and doing all this and keeping your position sizing small, good for you. You're keeping your position sizing small. But when you don't really know what to practice because you don't know what you don't know, to circle back to what we talked about earlier about free education, and you should be scared, because the one thing you should be scared of is, okay, yeah, my position size is good, but am I even practicing what I should be practicing, or am I practicing stuff that's actually going to give me bad habits? I love this saying, and I will continue to say it. Practice does not make perfect. Perfect practice makes perfect. And if you don't know what you should be practicing, then I don't care that you have your position size good. That's the one good thing that you have going on, but that's not going to lead you to any sort of consistency if you're trying to piece together and have some sort of Frankenstein strategy because you just refuse to spend anything on a structured set of education. So good points there. This is some good stuff, Stan. I don't know where we were, but you're absolutely right. So no. What you're saying is it sounds dumb. It's not. It maybe sounds dumb, but peeling back the layers of context, I would say you definitely approach this all in a very logical manner. Looking at the time here, we're going to have to start to wrap things up. So you kind of let the cat out of the bag a little bit, though. You are trading options right now. So I guess where did all that come about? What made you kind of want to get focused more so on options as opposed to the many other vehicles that are available out there?
I would say the options is because of the leveraging you get. And also keeps me from having to put in thousands of dollars into a trade. I mean, you could reap some pretty good rewards with just a few $100s on an option trade because they move so quickly. But there again, it's got a quick downside to it as well. But options have immediately you limit your risk because you can only lose as much as you put in. I'm never trading margin because I'm not using my entire portfolio. I'm sort of trying to develop, basically my trade plan would entail, I would have, some, actually, large cash account to the side. I'm kind of trying to shift more of that into equities because I realize my cash burden is kind of a drag on my entire portfolio. Believe it or not, it's actually hurting my percentages by keeping so much money into cash all the time. But where was I going with this? Okay, so, but I would like to, say, hey, on a daily basis as I trade, I would only go in with maybe $5,000 or $10,000 at any given moment, and then at the end of the day be completely clear, and then be cash and not have to worry about what happens overnight in London or in China or something like that. That would be my ideal for the trade, my day trading account. In my retirement accounts, I would keep that primarily as a swing trading account because I have longer time frames. My big problem this month is it's my first month I started kind of going more full time at it, and the beginning of the month I was just hitting trades, limiting my losses, every day positive in the green, and then we had this rotation go on, and my problem is I suddenly looked down and I'm kind of semi swing trading, semi day trading, and this is my I'll call my play funds. But then I got a big spanking on that because those you shouldn't really combine the two strategies. and I didn't realize what I was doing until after the downturn occurred. I mean, today we're getting the recovery, so it's not as much pain, but when you have something like 40 positions out and you're heavy in tech and semiconductors, and we have a turnover, and those are the sections that get hit the hardest. It's not like you have one loser. It's like 40 losers on a page. Obviously, it's all unrealized, and it started to come back. But been through these moments before, and if I can modify my trade plan so that I don't have to quite go through these painful days or weeks recovering from one of these rotations, then I will try to devise something for that.
I got a great suggestion, and you may have already been familiar with it. Did you take the Grow Rich course yet?
Grow Rich course? Not entirely, no. I touched on it, but I don't think I completed that.
If I had one recommendation, like I said, obviously everything is subjective to whatever anyone wants to do. The Grow Rich course, there's a section on it about diversifying kind of a retirement portfolio. I would recommend you kind of take a look at that and then continue to do exactly what you're doing for your day trading account. Like I said, just an unbiased third-party opinion out here. But obviously, I don't know, Clay, besides him being super heavy into one kind of industry and sector, it sounds like a logical plan, right? Swing trading a retirement account and then day trading a cash account, right?
Yeah, no, I don't see anything that's got me, wanting to shove Stan up against the wall right now and be like, what are you doing? What kind of life choices are these?
Believe me, I know there's a lot of holes in my current course of actions because
but it's all at the end of the day, it should be proportionate because you're heavy in tech and semiconductors, but those things have been doing very well. So I would assume, like you said, those numbers should be up in your favor, and that's the beautiful thing about cash account is technically speaking, that's why you got to let winners win. You can get a lot more on the upside than what may happen on the downside. So, I mean, now from a psychological perspective, I get it. You probably don't like the mental pain of having to sit through these, the turnover that we're currently experiencing right now. Now, for you listeners, by the time this hits the air, this will be, well in the past. But, it sounds like you just need a little bit more diversification. But at the same time, it is a two-way street. Right now, you're feeling the pain of it, yeah. But when things, go your way and stuff, given the way the math works out, numbers can only go to zero, you can still, balance things out, in your favor. But yeah, at the end of the day, if you just from a, hey, I want to sleep like a baby at night perspective, and, that means more diversification, well, then it sounds like you have the solution to what you need to go at. And that just summarizes and kind of makes perfectly how we're all different. It's all a matter of personal risk tolerance levels. And some of us can sleep better at night with different circumstances going on. But that's definitely a case-by-case basis. But overall, though, would you say things are going pretty well, though, from a broad... Right now, yeah, you're sitting in a little bit of pain due to the tech sector and all that. But, I mean, overall, are you happy with how things are progressing?
Yeah, actually, by the numbers, I'm doing a lot better than I've been feeling. Because I always feel like I'm sitting in losers.
I love that quote.
But I mean, not to brag. I mean, just to throw out some percentages because I'll keep the actual numbers are private. But my first year out after June, where I started CTU, made 100% on my overall portfolio. Considering I'm only trading 30% of the portfolio, and the rest is sitting cash. You can almost say I made 300% on the funds I was actually trading on. So that was my first
year. Well done.
Year.
Very well done.
And then
now let's keep in mind, Stan, just to set context, Stan is not sitting here saying that he's got some, $3 billion account and he just doubled up, $1 billion, because there does reach a point where, okay, you can't quite scale when you get to that certain amount.
It gets harder as you get bigger.
Yeah. So he's not saying that. But it's also, you don't have to give exact numbers, but would you say it's been more than, let's just say, $1,000 that you've created these returns on?
We're talking six figures.
Okay, well, there you go.
Yeah.
So then we'll just leave it at that.
And
Education pays, folks. Well, you know what? Wait a second, Stan. Wait a second. I have a bone to pick with you right now, and I'm going to do it right here. You get those sorts of gains, and you're griping and complaining, all this Napster crap, and geez, it's $2,000. I don't want to pay $2,000, and now you're at six-figure gains.
See, that's before I started trading for real.
I don't know. I totally am just busting your chops right now, but I mean, goodness.
You could bust his chop, but when Stan was saying that, it is a generational thing. I come from the Napster age as well, and that's exactly why the Surgeon's Dilemma exists, is because
you guys are absolutely...
we have always had access to all this free stuff, and it's everywhere, but the thing is, it doesn't mean it's good.
Yeah, no, and I'm full disclosure here. I went through I never paid for a single thing for trading education-wise, and I said, I will never, ever, ever do that again, and the proof for that is when I got into real estate, and I've done videos on this where I show all the real estate education stuff that I bought, and that was like just shy of like $4,000 or $5,000. So when it came time to learn something new, I'm like, screw the free route. I never want to do that again. But I just got to laugh. $2,000, and now you're making six figures. But I totally get it. But that's awesome, man. Well done. And so far this year, and
I'm sorry.
Yeah, go for it.
Let me share a text that I sent my brother earlier in the month. I basically said to him, I hit 100% again this year. So that's 2 years in a row. And I'm thinking if I do this maybe a couple more times, I'll have $1 million. But, past performance isn't a guarantee of future performance.
That is true, but systems and strategies that work, keeping your losses small, approaching things, while it's not going to guarantee you 100%, there is a reason why there is such a thing called a professional trader, because things can be replicated. There's also a reason why there's no such thing as a professional slot machine player, because that is totally randomness that you can do nothing against. But that's awesome. Congratulations, and keep up the good work. And I always like to hear six digits. That's good stuff. 100% is good stuff. And we are going to have you back at another time for sure. But one final question,
absolutely,
before we move into the fun questions. Walk us through kind of your routine. I mean, what does your routine look like, since you're kind of a swing trader, day trader? I mean, when are you doing your homework? How are you building your watch list? All that good stuff. But what's a typical kind of day/week look like for you?
Here comes my dark side. I'm sure Ches will be pretty unhappy with me. Okay, I'm not very much of a morning person, so I usually miss the opening, and I just kind of crawl out of bed around 8 o'clock, 9 o'clock in the morning. So probably a good hour or two of the market's gone by the time I even cast my eyes on it, which in a way is kind of good, because a lot of times I skip over that morning heartache where there's the early sell-off, and then I'm just turning on the computer where things are right at the bottom of the morning. So I've used that to my advantage at times, but I just have the darndest time waking up. Now, for the last couple of months since daylight savings times ended, I was able to adjust. So now I'm up, early with the market, because here the market's open at 6:30. So, I need to be up out of bed by 5:36 to get my coffee and get it over to the computer. But as I say, there's a lot of holes in opportunities for improvement for what I'm doing. And one is to use scanners. That's on my to-do list. I've really just been concentrating on chart patterns, price action, volume, wicks, and candles. I don't have a whole lot on the chart. That's pretty much it. I've even started removing Bollinger Bands. I maybe have a 50-period moving average. But I really pay attention to those candles and wicks, because they really do tell you the story. But things like also diversifying, looking at other sectors. That I have like a to-do list of things that I need to research and get on. But for now, my concentration really has been on the position sizing, the chart patterns, the candles, and then kind of having a feel for the market overall. Because with the swings, you got to have a little more fundamental basis with where you are with everybody else. But there again, I'm also trying to focus more on my day trading aspects, which is, a bit more of a micro view of things. Going through the learning pains of that as well now. Here's the funny part. Before it was trying to remove my investor hat so I can learn to swing trade. Now it's, okay, set the swing trade hat to the side so I can learn to day trade. Because I'm finding that my swing trader hat is getting me in all sorts of trouble with my day trades. The last thing you want to do is turn a day trade into a swing trade and then hope for the best. I mean, it's a completely different philosophy and time scale for your entries and exits.
Absolutely. And it's just, I mean, you couldn't have said it any better. It's not that they're polar opposites, but the process and what you're generally looking for and sentiment and, PE ratios, all that kind of stuff is drastically different than exactly like you said in your day trading. You're looking for short-term imbalances, and you're going to take advantage of people doing things out of just pretty much pure emotion. And, that's what we use technical analysis for, is just to read people. But
I got to chime.
Obviously, you're on a...
No, I'm sorry. I was just because I can totally relate to this too. And I don't know if you guys do this, but for me, like for my retirement accounts where I'm like, okay, yeah, I'll check in on this stock after I buy it like 35 years from now. And then here I am with my little day trader mentality, like, but I can get 15 cents better entry. Just wait for 15 cents better. It's like, wait a second, Clay. You literally don't care about this. Heck, you don't even ever want to sell this. You ideally want to hand this off to your kids, and you're worried about 15 cents right now. So I totally understand, Stan, how it can, mindsets can bleed together. And yeah, everything's a chart is a chart, but then you still have that's like, the mental thing where it's just like, really, Clay? You're worried about 15-cent difference when you literally don't care about this stock for decades upon decades. So sorry to cut you off there, Ches, but I wanted to be part of the conversation there because I can totally relate to what you guys are all talking about. I just want to play with you guys. That's all.
We really are hardwired. So it's just trying to overcome that wiring. There's something you could do about it. And it's, practice, really.
Yep. And I mean, the fact that they're different hats is, I think, a great way to put it because, and I'm not saying it's easy, but you have to essentially change the hat out. And just like Clay said, he's looking for 15 cents better entry because he's got his day trading hat on. But the other hat that needs to be on it is Mr. Buffett, holding this stuff for decades and ultimately giving it to his kids. But Stan, it's been an absolute pleasure talking to you. I mean, you're just a shining example of education paying dividends, and I wish you all the best. And I have absolutely no worries about you and your future. You're doing everything in an absolutely great, logical manner and treating this like a business, which I love to see. But now it's time for the questions that really matter the most.
Did you forget about the no, you're trying to scam him out of your time machine. Are you not going to lend him your time machine? You can't skip over that.
I was actually going to take it privately to see if I could sell it to him with all his trading profits.
Well,
but
that's mostly in the IRS. I'll see that at retirement.
So if you could go back, and I will lend you my time machine because you are a community member. He can afford to buy one or build one, but that's besides the point. All right, so if you could go back and give yourself one piece of advice, and it's not a stock buy or sell recommendation, what would that piece of advice be?
Okay, so if I were to go back to the turn of the millennium, and what would I tell myself? Definitely I would tell myself to stick with it. I'm not sure exactly what was going on in my head. I probably just washed my hands of it and walked away after taking the hit from the dot-com bubble. But had I stuck with it, I would have had, good 20-some-odd years of time now. Be a completely different story, I'm sure. But yeah, persistence. Stick with it. Don't give up. And if it's that important to you, you have a mind to complete it, keep going. Don't sway away.
I like that. That's good stuff. And yeah, you have a mind for it, but also, as we always say, you got to have a passion for it. You got to like this stuff, or else there truly is no chance at success. Now we can move into the questions that really matter. And I'm going to kick off this party. Stan, what is your favorite movie?
Okay. I guess this was.
Did you think a really serious question was coming?
No,
Did that have you nervous there for a second?
Okay. No, I've seen a few of these. I should be prepared for this one. I think there was a movie for this because it was a pilot, but this kind of goes way back. Now, do you remember the old David Carradine series, Kung Fu?
I know of the Kung Fu Kid, but I don't know of what you're referring to.
Oh, you need to go back and watch this. Kung Fu is a story about I guess he's half American, half Chinese, and he was basically orphaned in China and was raised by Shaolin monks. And then for reasons in the show, he had to flee China and come to the United States. And this is during the Western times when the railroad was going through and such. So this show aired, in the late 70s. And, being a kid at that time, it really struck a chord with me because here's this, Asian guy experiencing all the turmoil as you would from the Wild West. But having his training as a Shaolin monk, I mean, he was so calm and cool and collected, and never raised his voice, and was just such a breakthrough character. And that's really, I mean, stuck with me over the years. I mean, I've gone back to watching it. Obviously, the quality of the show isn't quite what I remembered as a child, looking at it now from this perspective, with CG and everything. But it had very, very good lessons. I'm surprised you never heard of Kung Fu.
I mean, I've heard of Kung Fu. Not the show.
I'm adding it to my list, but yeah, I think I need to go study with the Shaolin monks because I need to stay cool, calm, and collected more often as well. But what would you say is your favorite meal and dessert?
Oh, not that I can have this every day, but I'm a big sushi eater. And if I were to pick one thing out of the sushi, it's kind of a really strange sushi. It's called pepper salmon. And it's what you have to have at the very end, because it's basically
sounds fantastic.
It's a salmon sushi, but it's been rolled in black pepper, and you don't want to have this early in the meal. It's one of those things that you have it at the end, and it kind of washes away everything else. But hours later, you'll know you had it because it just kind of keeps coming back at you. But,
very nice. That's my style there for sure. And I love sushi.
But yeah, I mean, aside from that, we have all sorts of things here because. My wife's Cantonese American, and she grew up in Spanish Catholic schools, so she taught me how to eat real Mexican food. It's funny coming from a Chinese gal, but then also Panda Express is not Chinese food, according to her. So, if I could say that here. So,
well, we were going to get them as a sponsor, but thanks a lot, jerk. They're not going to come on. They were just getting ready to sign the dotted line.
So thanks to my wife, she's taught me how to eat, because Mexican food to me was Taco Bell and. Oh, there goes another sponsorship right there.
Yeah,
sorry,
I was literally meeting with them right after this interview, so thanks. The executives are sitting across the room right now, and they just got up and left, so thanks, Stan. But, all right, well, we'll definitely bring you back because I feel like there's so much more we can talk. But I'll bring up the last question here. I'm sure you know what's coming your way. 3 words, Stan. These 3 words need to be what you would use to describe and associate with a successful trader. So what would those 3 words be?
Okay, I've said one, or maybe 2 of them already.
I've heard persistence. I'm assuming that's going to be one of yours.
Okay, and the other's patience. And then the third would be practice. So, hey, I made an alliteration.
There you
patience,
go, P
practice,
cubed.
And persistence.
You like numbers, right? P cubed. Was that a good one, Stan? Well, am I clever or what? Yeah.
P cubed. There you go.
Cubed, right?
Cubed,
Isn't that?
cubed,
I'm trying to think the math, right? Because you got squared at 2, and then cubed, I think, is 3. But I don't know. I've been out of school for a while. Well, hey, Stan, I'm assuming here that you would come back, but are you willing to come back at some point in the future?
Oh yeah, definitely. This is a work in progress, and I'm nowhere complete. That's a whole other chapter, I'm sure. But yeah, definitely.
Well, yeah, that's what we'll have to definitely have you back for that. But you're clearly on the right path. You're clearly doing well. And, if it ain't broke, don't fix it. Sure, you can fine-tune things here and there, but it sounds like from more so the overarching strategy, you got yourself in a good place. So thank you very much again for hanging out. Thank you for being the guinea pig and working with us through all our issues at first. And we will definitely have you back again. So thanks a lot, Stan. I appreciate it.
Oh, well, thank you. And it means a lot for you inviting me here. It really does.
And we'll have you back for sure. Before I go, though, and before Ches and I leave until next week, a couple final things here. First, if you're listening on YouTube, make sure to click that like button. Check out the rest of the channel. There's other content. There's live trade videos. There's the Surgeon Dilemma video. There's all sorts of videos out there. So check out the channel, and hopefully you decide to ultimately subscribe to it. If you're listening on iTunes or one of the other podcast players, be sure to subscribe. And also, especially on iTunes, if you could leave us a rating, that really goes a long way. Even if you never spend a dime with us, that's totally cool. But if you could hook us up with a rating because you enjoy this, like I said, that helps out us quite a bit. And then finally, if you're listening on the website, claytrader.com, make sure to click that share button. And please, by all means, leave us a comment down below, the show notes area, because we do read them. We will reply, and it's a great way to just kind of give us your feedback or anything else. And because, we definitely read that stuff, and we're more than happy to hear your thoughts or answer any questions that you may have. So thank you again to all of you as viewers. Thank you, Stan. Thank you, Ches. And we will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.